Hello traders, today is the 12th of November 2010 and happy trading to you all directly for the headquarter of the Swing 240 trading system. We wish you a very happy trading day. Right here I have the Euro USD. As we have seen so far, the market was consolidating before London was open. Okay, this zone here. And then we have a trend according to the market patterns rules. And now we have again a consolidation in this zone. We are waiting for New York to open. Okay. Right now is going to be. I will show you my lovely clock that I have here. The first one here is the London time, okay, which is right here. The second one here is the GMT, okay, the GMT. The Greenwich Meridian time is this one. This is from some country in Africa and all the rest of it, and that's where the equator passed through. This is the clock of the equator, and right here I have my lovely Eastern time. Okay, so this is if you're using the Microsoft, okay, you should have this and set your clock ready. In case you do not know which time is it, you can set your clock and have them ready here. You either using the Central Time, or you use the European time. You can set your clock ready here, so you can see what's happening here. So this is my lovely London time. This is the Equator time, GMT. Okay, Greenwich Meridian time. Okay. If you want to visit Greenwich, you should come to London, right here. And this is the Eastern time, 9 a.m. right now. In 30 minutes time, the clock will swing nicely to 30 minutes, will give us the clock, the bell, the Eastern time, 9:30 Eastern time, New York will open, okay? Now, as the TSTW24 traders, we respect the opening bell. Why? Because the smart money respect the opening bell. We are doing exactly what the smart money is doing. If you want to be rich, you follow the rich people, okay? If you want to become a business person, you follow the business people. I think it's a smart enough thing to do. I believe that's correct, okay? So what we are trying to do is to follow the smart money. If they are creaming it to the upside, we will cream it also to the upside. If they are creaming it to the downside, we will cream it to the downside also. So right now, this two yellow horizontal line is now being violated, which means this resistance is now kaput. Okay, so to speak a bit of German, okay, the gate, this level is broken, okay, so we say Auf Wiedersehen to this support level, but there is another thing we need to pay attention to before we say Auf Wiedersehen to this level, okay, which means goodbye to this level, is the retest of this level, very important. So now it's broken, we acknowledge that, we will watch it to retest it, but another thing we need to pay attention to, we watch the price, and then we watch what? What do we watch again? We watch the price, and then we watch the clock. Okay? A lot of people do not pay attention to the clock, but it's one of the powerful tools in the market. And in my view, is that trading is about timing. That's why we come up also with the TSTW SYS08, the unfair advantage trading. The price, the clock, and the indicators. Okay? So you look at the price first, and then you look at the indicator, whether you're using stochastic, margin, moving average, RSI, AROM, whichever indicator you are using, okay, or using my special RSI indicator, okay, which is not available for the public. You have to look at the price first. That's the best attitude. Nothing is hidden. If somebody is buying, it will show on the price. If somebody is selling, it will show on the price. If somebody is forcing the price too fast that they're not supposed to do, it will show the price as an exhaustion. Whichever is going on, it will show. If the volatility is low, if the market is quiet, it will show. The size of the candle will tell us. We will know that it's a quiet period, okay? Nothing's written. If the volatility is increasing, we don't need the volatility indicator. We see the size of the candle, the resistance be broken. If the momentum is increasing, we will know. I showed you last time about I don't know whether I posted that video on YouTube or not. the channel will tell you about the momentum. I can show you that quickly if I have enough time in this to show you how we do that, how you can measure momentum without a momentum indicator. You just draw a channel, okay? You see this channel I'm drawing here, and then you do the midline of the channel. You divide the channel in two, okay? First thing that the first question that you ask yourself is the channel rising or going down, which means is the slope positive or negative. In this case, looking at this channel where I'm rotating my cursor, the channel is going up, which means it's a rising channel. The slope is positive, okay? The rising is positive, okay? So the next thing, the next question that you ask is the price riding, okay? Riding the upper part of the rising channel. If the price is riding the upper part of the rising channel, is strongly bullish. If it break out of, suppose the price break above the upper part of the rising channel, that's exceedingly very bullish, okay, which means we have another channel be formed here. So we keep drawing our parallel line, which means we are shifting gear, okay, to the upside fast, okay. So this is what's going on, okay. So when we are here, we know that it's bullish. If we cross into this section, it's very bullish. If we go there, that's quite bullish. If it's here, it's madness almost, okay. That's how we measure the momentum in the without the momentum indicator. One thing we need to remember, before the computers, people were perfectly trading and were making more money than we are even making now using tools. So this is the momentum indicator here, the channel will tell you. So after the prior high, the upper part of the rising channel, if you switch back to the lower part of the rising channel, we know that that bullish momentum is decreasing, okay? If it pop out, then we put a question mark on that bullish momentum, okay, and observe the price and see the next move. Here, as you can see, it was quite bullish, which was the first way this morning. It popped out, okay, we acknowledge that, and what's happened, the price returned back again in the direction of this channel. If I extend my channel, you will see that it came back into the same channel, okay. So all it did is just went up a bit to have a bit of fresh air, so to speak. He went up a bit and come back in, you see, right there, and just exceed and speed up, okay. You see, this is the speeding part of it, okay. It speed up fast, so we have an increase, and right there was a bit too much, and exactly there we get to this, which we project the same channel to the other side again, you see, and it was too much, and people push it back down again. Now it retests the channel here, and went on again for fresh air and consolidating. We can extend this channel for the whole day just to monitor what's going on. Leave it like this, okay, and monitor what's going on. That's how you can use the channel, okay. Apology for all my blah 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 here. That's how you can use the channel without the indicator, the momentum indicator, to measure the channel. If you draw a channel on this one, okay, which is not quite easy, this session, which is the third wave, is not easy because it's quite fast. It's almost vertical. It's a vertical move. Vertical move, okay? Fast. That's why the money is made. Third wave, woo, up, finish, okay? And then quickly down, because the fourth wave, the money is taken out fast. Everybody is taking money out fast. That's what's happening here in the fourth wave here. And the fifth wave couldn't even retest this one, and we have the blah blah blah. But the day is bullish, okay? So we are not bearish towards this market today. So we are watching the action above this yellow line. I don't want to sell today at all. I'm not going to sell today at all, okay? So we're watching the action above here, whether there will be a continuation after New York opens. We are now waiting for New York to open. Very important. Waiting for the opening bell. I hope you enjoyed this video, that you always respect the opening bell. There is a reason why there is a bell, because the smart money, there's a competition we are in. So nobody can teach. We have the opening bell. And once the market is open, the smart money is willing to come into the market. If the market is closed, the smart money is taken out of the market. But when the market is still open, there are times when people go for break or take a bit of fresh air. So remember all these things. Do not forget the clock. The clock. The clock. Do not forget the clock. So until the next time, enjoy yourself and be very happy. We are the Swing 240 traders. Thank you.